and I broke a rule here. So once we review this, we'll discuss. Or actually, let's start with my trades today, guys. Okay. Your first day, Faisal. How you do? You trading simulator? Yeah, you can share your trades with us as well if you're interested. Pick a screenshot of at least 2 time frames. Make sure to include some price action from behind, price action from the front, and if you are not sure what mistake you did, or even if you know, you can just send that trade in the off-topic chat and we'll take a look at it. Alright guys, so what did I trade today? I traded first of all NIO. Hello Nick. And I like the NIO at the beginning, not to the long side, I liked it to the short side. And my plan, I know, not NIO. And my plan was to trade this thing to the short side. Look at the 60-minute chart. I saw the drop down, kind of a pullback, and then we're making a doji, and I told myself that I want at the open to see it either dropping down or going back to the up a little bit and then squeeze back down below this 60-minute chart right there, and then just shoot it to the short side. This thing didn't do that. You could see that it did the exact opposite, and it did a new 60-minute high right here, and that coincided with a new 1-minute high. So what happened at the open? At the open, I know, sold off, got squeezed back up, closed as a hammer, made a new 60-minute high, new 1-minute high. I'm taking it to the long side, stop loss somewhere around here, and this was tough. I didn't turn to partial at 1-to-1. The spread was 4 cents, and it was so jumpy. It was so jumpy that it went here. I took a partial, then it dropped down there, and then it came back up. So it was a little bit spready and jumpy. It was a little bit scary, and yeah, 2 partials all the way up. Exit the rest a little bit below my break even. After that, I continued watching it, and I saw that it didn't actually sell off. We formed sort of a double bottom with the second bottom higher than the first one. But what's my mistake here, guys? Anyone? It's not exactly a mistake, but it's something which is not the best thing to do. I mean, I'm going to tell you why it was fine and why it wasn't fine at the same time. But anyone could guess what was not the best with this entry? Come on, guys. Yeah, it was wiki and it was on the way up. Like my stop here, yeah, Julian. It's third candle, and my stop here would have been so wide, right? I can't have a tight stop loss on this thing. And with a wide stop loss, I need a huge move on INO. Like if I have my stop loss down here, right? And it just goes up and it continues going up. This is my entry. This is my stop loss. This is my risk around 24 cents and my reward around 40 cents, which is above the high of the day, which was unrealistic. I mean, it worked out. It worked out like a charm, but a stock, I don't know, which priced $9, $1 move is like too much on it. It's 10% move of the stock's price, right? And yeah, I didn't really hope for it to go all the way up. This entry was bad because there was no good technical stop loss except for this level right here, because I took it to the long side on the way up. Best entries are as close as possible to the support or after the pullbacks. Like this right here wouldn't also be a good long. Looking at this huge drop, it could have made a reverse ABCD pattern and dropped. But yeah, around here, it's not a good long and it's not a good short. So I'm waiting for it to go up, and it did that, so I took my entry. I took my entry closer to the breakout. Stop loss is so wide, not really great, and what I should have waited for is a pullback and a continuation. Now right here, we're having sort of this W shape. It's as close as possible to the support. I'm adding to my position. We're also having an ascending triangle being formed. I'm taking it for the breakout, moving my stop loss to the middle, and then partialing all the way up. Another mistake I did was here. Anyone? The mistake is exiting. But why is it a mistake? Based on our reviews. Still in range. Yeah. So I shouldn't have exited. Why shouldn't I have exited? At the 9 EMA, that's a good one thing. And retesting the level. Perfect. So you're having clear resistance right here. Right, guys? So this is the range. Stock is breaking the range, and what's happening after the break of the range? After the break of the range, around 80% of the time, if the stock is actually working, this is an ugly 8. Yeah, around 80% of the time, the retest is happening, right? And the retest, it could go up, pull back closer to the range, and continue going higher. Could bounce exactly from the retest area, and it could go a little bit inside the range, and then go back up. The retest is good as long as it's not breaking the half of the range. If it's breaking half of the range, I'm no longer interested in a stock to the long side, and I'm starting to look at it to the short side. This right here, it was a retest. I knew it could be a retest a lot of times. These type of huge drops, they scare me out. I exit and then they work out. This happens a lot, and I knew that this might happen right there, and that happened. And my bad was getting into that same trap one more time, unfortunately. So yeah, I was looking at the 1 minute chart, and that was my issue. That was bad, and because of that, I missed the move. The biggest moves, they happen after the retest. Market makers are there to screw around with us. They know where you put your stop losses. They know that a lot of the rule which will go to don't give the gains back to the market, or don't turn a winning trade into a losing trade, or I don't know what else we say right there. After the breakout, small move, partial, break even, exit, and then the move happens. Remember that each transaction in the market, each one happens, there is what? There is a buyer, guys, and there is a seller. Each one of those two have their reasons to buy and sell, right? Me selling right here, what was my reason? Getting scared out. Someone else who is smarter than me knows that this is a good place to actually buy at a retest or restock their shares, or maybe it was someone who shorted it right there, got my shares bought. So yeah, over time, or eventually with time, hopefully we will be the smart people buying right there, right? And okay, now another stock I traded. Okay, this is bad. Let me see. Another stock I traded was let's see what it was. INO, and I forgot a trade. Was it NIO? No, it wasn't NIO. NIO. No, it's not. Why my montage is not working here? Let me actually see that. Let me link it one more time. Actually, there is an easier way to do that. We'll do it now. Okay, let me check my watch list, because it was on my watch list. Plug. Perfect. So plug, it's the same thing. I liked it on the 60-minute chart. I liked it for a breakout. The 60 sold off, then get bought all the way back up right here, and then a breakout, right? I like this breakout right here. I'm taking it to the long side for the break. On the 5-minute chart, a bearish engulfing crack, right? A bullish engulfing crack, where the bullish candle engulfs the red candle, makes a new high, and then shoots back up. On the 1-minute chart, a mini 3-bar play, taking it to the long side, stop loss in the middle for the breakout, partial, and exited break even. So this was merely a scalp play. I honestly expected to get more from this thing, but I know that my entry wasn't ideal. Why is that? Because it already did a move from 20.80 all the way to 21.60, right? It's 80 cents move, and let's say $1 move, and $1 move on plug is 5 cents, 5% of the stock's price, which is too much. Because of that, I didn't hope to hold it for a trend, and I just went for a quick scalp, partial to 21.60, and that was the move for me. Now let's take a look at your trades, guys. Ivan. So Ivan traded CCL. And how did you trade CCL? Let's take a look at that. First trade was an open range breakout, bailed when it made a new 5-minute high after 2 bullish hammers. So it was a 5-minute open range breakout. This is the market open, this new 5-minute low. Second trade was a reverse ABCD pattern after it bounced off the 9 EMA on the 5-minute chart, exited at 2 hours, which was also a daily level, and the stock was above the ATR. I like that because I actually saw that one around here. There was another member who was trading CCL. They were still short on it. after this pullback, and I saw that the daily chart, it already did move above the ATR. And if the stock doesn't move at the ATR or above the ATR, you definitely need to take partial, because you can't really force stock to make a move more than it usually makes, right? Sometimes it will make a bigger move, but you can't really force it. Now look at CCL. Pre-market is really weak. I also had CCL on my watchlist and I liked it, but I didn't like about it is that in the pre-market it already dropped a lot. It dropped around, what's that, $2.50 in the pre-market, and it's $20 stock. I didn't really expect it to sell off even more than it did in the pre-market. Because of that, I didn't pay close attention to it. You could see that at the open sold off, got squeezed back up, making a lower high. New 5-minute low, new 1-minute low where you're taking it to the short side. This would have been a little bit concerning for me this week down here. So yeah, I doubt I would have held it, but it still was decent. And you held it, right? You bailed. It says that you bailed, but I can't see that you're bailed right there. Oh, I see you exited here. That's good. Okay, right here I wouldn't have exited. Yes, these double hammers, they are scary, right? But the stock already dropped a lot, 3 candles, and we know that it could make a pullback. You also have sort of a range around here, or sort of a descending triangle. It's not clear descending triangle, but you see the range here, right? It broke it, a retest could happen all the way to the middle of the range, and then a continuation. We know this as well. Along with that, what do we know? We know that the stock could drop down, pull back to the 9 EMA, and then continue. So yes, the 5-minute chart was scary, but there is no reason to get scared only because there are hammers or double hammers when there is a bigger picture or a bigger pattern you could see. Still, you got it into a winner. You re-entered at a reverse ABCD pattern, stop loss up there, exiting at 2 hours, which is really smart. Daily level and the average true range was made. So really good job on this one. X the unknown. Let's see what you traded there. Thank you, Ivan. X the unknown traded PFE. And what did you do on PFE? PFE on the 60-minute chart, it was a little bit strong, right? But it wasn't in a range. There is the range here. This is the breakout, and it should make a pullback at one time or another, right? So you traded it within the 60-minute candle, which is not bad. Let's take a look at the daily chart. The daily chart got up. So looking at the daily chart and the 60-minute chart, I'll be a little bit long biased. By the way, this move, it was in the pre-market, right? Not after market. Yeah, it's in the pre-market. This is one of the reasons I didn't actually short CCL. When I see that the stock is making a huge move in the pre-market, a lot of times, and I noticed that not always, but most of the times, what it does is it just sells off after market open. And that's what I was afraid of on CCL, and that's the main reason I didn't watch it, because in the pre-market it did most of the move to the downside. It did continue after the market open. That does happen definitely, but it happens less often. On PFE, that's what happened, right? It did most of the move in the pre-market, and then at the open it sold off. Later in the day it got bought back up. Why is that? Because it's an ABCD pattern with a 50% pullback. On ABCD patterns we'll have 50 to 70% pullback. Later on the day it's definitely a good long, but not earlier on the day. Now let's take a look at the smaller time frames. What did you see right there on the 5-minute chart? On the 5-minute chart, we're having a bearish engulfing crack where the bullish candle gets engulfed by bearish and breaks the low or makes a new low. That's good. It's also a 1-minute open range breakdown. Did you bail right there and then re-enter? Or it was a hotkey mistake? And this green, was it a partial or a mistake? Added and partial, okay, yeah. So look, if you add and partial at the same time, it's not the best idea, because you will be adding on the ask price, if I'm not wrong, no, on the bid price. Yeah, you'll be adding on the bid price, and you'll be partialing at the ask, and there will be a small difference. So you'll be adding here, and you'll be partialing up there. This is the first thing. The next thing, make sure to partial at least at 1-to-1. If you get that 1-to-1, for example, your stop loss was up there in the middle, right, and you took it to the short, yeah, this looks like more than 1-to-1 if you use this as your stop loss. Then take a partial. This rest was really good. A little bit of too much partials, right? Too many partials. But the move definitely was so big in comparison to the stop loss, so it's fine. It's something to work on. I also am at fault of that. When we are having big share size and the stock makes a huge move, we just stop trading the technicals, we stop trading our rules, and we start trading the PNL. In the future, we definitely need to focus on making the trade look good and not on making money. Money is the outcome. It's the result of playing well. More, let's see what you did. You're welcome. So what traded PTON? Now, I will be able to review this trade. Unfortunately, this will be tough because I can't see the pre-market. Actually, I remember this one. This was also on my watch list. The 60-minute chart on this thing was so bearish, if I'm not wrong. Let's take a look at that. I think PTON, the 60 was bearish, and I also liked it for a short. PTON. PTON, where is the open? There it is, the open, yeah. So the 60-minute chart, you see this flat support right here? I like this thing to the short side at the break for 97.50. Or not 97.50, somewhere under, yeah. I think I like this one to the short side because of this. All the moving averages are above it. We're having flat support. If I have a weak pattern, I would take it to the short side. At the open, it dropped down, and I don't like that. I would have liked it if it went up and then squeezed back down. But it immediately dropped. After that, it did a huge move to the upper side, and I told myself no reason to just continue watching it, but it worked out. Let's get back to your trade. Oh, you lost money on the first candles. I see that. Okay. So there it is then. You're taking it to the short side, which is not a bad play. Taking some partial, right? Taking some partial, adding right here. This is the good place to add, right? Remember what we said, like the plan to take it to the short side is around somewhere around 97.50. Once it makes a new 60-minute low. That was it right here. So that entry, if you missed the first entry, would have definitely been good. But I like your patience. Your partials. First partial and you waited, second partial and you waited, you survived the pullback, right, at your position, and that was early. There was no reason to exit right there. Why is that? Look at this. High, low, high, low, high, low. If you look at this, stock is making lower low and lower high waves. There is no reason to exit up until at least here, the moment it makes a new high. Right? You could take partial there, you could take partial there, you could take partial there, maybe take a partial after the hammer on the 1 minute chart. The moment it makes new high, this is the place to be concerned, but still not taking it to the long side, right? Then you're having higher high, higher low, and it just shoots back up, right? This right here was great, I like it, depending on how it looks on the 5 minute chart. If on the 5 minute chart it made 3 candles, I'll avoid it. If not, this looks like a good entry based on the 1 minute chart, right? Took a partial, no reason to exit. Look at this, low, high, low, high, low, high, low, high, low, high. You're just making lower, higher lows and higher highs all the way up, like literally no reason to exit. So this shouldn't get you scared out. But good job, your patience is good. I like your patience. Surviving pullbacks, holding for big moves, taking a partial here and then holding all the way up there, that's amazing. I like that. Just need to work on some small stuff and you'll definitely get there. So what do we have right here? Whose trade was this again? I think, okay, this is Wild. So Wild traded CCL. Let's see how you traded CCL, Wild. This is the 2 minute chart and this is the 1 minute chart. You traded mainly on those 2 time frames? It would be tough to review this. We definitely need bigger time frames, at least the 5 minute chart with a lot of price action before, right? If you are trading and your charts are this zoomed in, it will be a little bit difficult to trade, right? When you're trading, you need to have your charts zoomed out. You need to see the bigger picture, you need to see the waves, you need to see where the stock is actually going. Like right here, you're taking it to the long side, and I see why you're taking it to the long side. It's just making an engulfing 2 minute candle, right? on the 1 minute chart it's making a new 1 minute high and it looks green, but overall, and you could see just even from the pre-market price action, it's just sloping down. It's below view up, it's below the moving averages, it's on a downtrend. A new 1 minute high doesn't mean that it will go up. Why is that? Because it's always been making new 1 minute highs, and it will still be making new 1 minute highs, and each of those new 1 minute high don't really mean that the stock is going to be long, right? You need more indicators in your favor. For example, it being above view up and above the moving averages, having a pattern on the bigger time frame, having a confirmation candle to get into the position on the stock, and then just ride the trend. So you took it to the long side and you get subbed out. Then you're taking it to the long side on the new high one more time and you're getting subbed out, and to the long side one more time and getting subbed out. Catching reversal is a little bit difficult. It's tricky. It's way easier to short it on each stop loss. Just look at it this way, right? If you short it here, right, and put your stop loss at the high of the range because you are within the range, you will be able to add one more time where you partialed, add one more time where you get subbed out, and even add here or add there. Going with the trend is way easier. I thought that since it made most of the move in the pre-market, it might bounce. I agree with that, and that's definitely the main reason I didn't short CCL. I didn't short it because it did most of the move in the pre-market, exactly like you say. And usually when that happens, those stocks, they just start reversing. But that doesn't mean I'm going to look at it for long, because sometimes markets stocks could make a huge move. Remember SPY, that was recently a huge mover, which moved, I don't know, from $4 or $8 all the way to $60 in one day. Who would have known that, right? Market could just make some crazy unexpected stuff, and you don't want to get stuck in those stuff, right? Always trade your patterns and trade your technicals. If you want to trade CCL to the long side, I don't blame you. Like we said, it made most of the move in the pre-market, and how much is it going to drop down? But do it the right way and catch it to the long side the moment it gives you a pattern. If you are a lifetime member, make sure to check my webinar on extreme reversals. I explained there how to catch a reversal all the way to view up and above, and what criteria you need to look for just to avoid this. And I mentioned actually this right here, which happened. I do mention that in the webinar, how to avoid this and what are the perfect entries. And when you're waiting for the perfect pattern, like maximum you'll get subbed out once, if it fails twice maybe with a re-entry. Alright, let's take a look at this. What does the high volume mean at the beginning? Well, the high volume, it just means that a lot of shares has been transacted at this place, right? Maybe a lot of buying, a lot of selling, but to me it's not telling me anything. It's just a bar with a big volume. I don't care about volume a lot, and especially when this huge bar happens within a range. I care about the volume in two conditions, okay? The first place I care about when I'm looking at volume is the low of the day. If I see at the low of the day there is a huge bar or huge volume, it means there is a lot of exchange happening down there, and this might be an exhaustion volume, and the reversal might start be setting up. Only seeing the exhaustion volume doesn't mean that I'm going to take it to the long side. The next place I like to see volume at is at breakouts on, for example, ABCD patterns here or maybe here. I like to see increasing volume, which shows me that there is a lot of buying or maybe selling or whatever, but there is a huge price action at the breakout area. And along with ABCD patterns, the breaks of the high of the days, the breaks of the pre-market highs, the breaks of the pre-market lows, breakouts in general, right? Those are the only places I care about volume. But this right here, it happened within a range, big bar with a lot of volume. It honestly doesn't mean a lot to me. Now, what else we had right there? We had some. So Sam traded AMD, let's zoom it in. And Sam traded AMD on the, let's take a look at what was that. 15-minute chart. You see, this is like one of my favorite open range breakouts. Around here, sorry, let's bring it black. First of all, we're having a range around here. Come on, bigger. There it is. So we're having a range here and we're having a range here, right? So the first place, if you can catch it around there, would be a good short with a target the low of the pre-market. And then if it breaks it, you could add to your position, move your stop loss to the middle, which was your initial entry, right? and go all the way down there to the next daily level, which you have right there. What do? You saw that it dropped a lot at the low of the day. You see it's bouncing off a daily level, right? And you are taking for sort of parabolic reversal. This is not exactly parabolic reversal because the drop is not parabolic. It's like that. But we know that the stock after 3 consecutive candles, not every time, but actually around here I'll start counting it from 1 because it's 3 bar play here and then it's 1, 2. But yeah, anyway, it was extended from the 9 and the 5, right? A huge drop with no real pullback. And 100%, I'm not taking it to the short side at the low of the day. I'm definitely taking it to the short side after a pullback. And since I know that the pullback might happen, why not trying to play that pullback? Take it to the long side the moment it makes a new high after the hammer and play that pullback to the 9 or closer to the 9 with a lot of partials. When I'm playing this type of trades, I don't add this add right here. I wouldn't have done it. It's one of the rules which I made new for those kind of reversals, parabolic reversals. These ads right here, I don't do them because the stock is actually on a downtrend and it could make a reverse ABCD pattern before a continuation. So it's just one entry, partial, partial, partial. If it goes against me, exit, add, break even, and the trade is done. Eric, let's see what you did. Eric traded plug as well. And what do you see in plug? Like, it's not bad in my opinion. Like, you're having a range right here, right guys? You're breaking that range to the downside. And it's also a 2-minute open range breakdown where you are taking it to the short side. Is this a bad step? No, it's not a bad step. It's a decent step. It's actually not bad because you've broke the 9 way before that and you're having range all the way down to the next moving average. If it's giving you the risk reward, take it. If not, then not. Took it to the short side, early partial. I honestly would have been stopped out at a loss here if I took it. But my plan based on the 16-minute chart, and you saw the 16-minute chart, right? When I reviewed my plug trade. My plan was to take it to the long side. And remember what I told you? What are my favorite open range breakouts? My favorite open range breakouts is to see that the stock is selling off. Then it's getting bought back up. That might happen in the first minute and it might happen maybe in the second minute and it might happen just over a long period of time, long period by minute, 5 minutes, 10 minutes. What's happening here? It's selling off, then buyers getting in at the breakout. I'm taking it long right there and then getting stopped out to break even. So yeah, unfortunately you didn't get lucky, I didn't get lucky. We both got just small scalp right there. Now that it's breaking the range, look at that, it's breaking the range. What do we want to see after the break of the range? After the break of the range, we want to see a continuation, or a continuation, a retest, and a continuation. We don't want to see the stock coming back into the middle of the range. And if it's coming into the middle of the range, you are no longer interested in taking it to the long side. And that's what happened. It's coming into the middle of the range, you are no longer interested in taking it to the long side. We might actually start looking at a setup for the short play, right? You take it to the short side here, which is good and not good at the same time. Don't go short on the way down, don't go short on the way up. Make sure to wait for the pullback. It's your confirmation and then put your stop loss at the level where it bounced from. So I would have just waited a little bit more to have my entry at a new low, not on the way up, because it could have just made another high for a bigger pullback and then a drop. You don't want to just give some extra 1 hours. You need to keep them and enter when you see the setup there. You're adding to your position here, which is the second entry. Is this bad? No, you're having a pattern here. Bearish, bearish, bullish. What is this pattern? This is a bullish engulfing sandwich. A bullish candle got engulfed by bearish candles from both sides. This is a breakout pattern. And what's your entry? The next new low. And you did that. That's amazing. I like it. Right? That was an amazing entry on this pattern. And it also had all the confirmations which we explained before. One thing though, early partials after the breakout, because after the breakout, it could either flush or drop, retest, and continue. There was a small retest here. Drop, where you took some partials. See, those are your partials here. 1, 2, and there is a third there. 1, 2, and there is a third on that candle, which is the 945, the open candle. If I'm not wrong, yeah, it is the 945, the open candle. So yeah, you are taking just a little bit so early. Then it's making that small retest on the 1, small retest on the 1, and then what? A continuation. This is what we want to see on trends. You want to see a break, you want to see a retest, where is a good place to add, and then a continuation. Avi, let's see what you did. So Avi traded CCL, and that was a short as well. I think it was only me and a couple of members more who didn't like this into the short side because of the pre-market price action. But yeah, this is not bad, as we mentioned, like, right? Confirmation candles, small range right there, taking it to the short side, partialing, adding to your position, exiting at your stop losses here. Your stop loss was a new wave, and I don't do that anymore. I give my stocks a little bit more room when I'm taking them. My stop loss is usually the level where it bounced from initially, especially when I'm within a range, and I can see that there is a range being formed since the pre-market. So that would be my range, and as long as that's my range, my stop loss is the high of the range. The moment we're breaking, right here, the moment we're breaking, I move my stop loss to the middle of the range, right? Because there could be a retest and then a continuation. Nice adds and partials. One thing though, the partials are so much, right, and they're so early. I would have held a little bit, and you took it to the long side here. I see. There was no reason to take it to the long side as long as it's still close to the 9 and the 5, and as long as it is downtrending. Thank you, Eric. You're doing well. So there was one more trade a member sent to me via email because he will not be able to attend our trade review. Let's take a look at it. There it is. So this is INO, and what do we see on INO? This is it. You see, this is the perfect thing. Who traded this one? Let me actually check the email. This is what I want, and I had to wait for. Benjamin, yeah, it's Benjamin. So look at this, guys. A, B, parabolic drop, we don't take it. We're having the C, you're having the D, but the D is where? The D is on a third candle. This is a white stop. We don't want to do that, right? We need to be patient. Just wait. If it goes without you, let it go, because it wasn't a perfect step. If it gives you the good entry, there it is, the pullback. Bouncing, you see that it's bouncing. So you see it's exactly from the 9 and the 5. Sort of a W shape right there. Buying it as close as possible to the support. Stop loss down there. Partialing at the high of the day. Just, not the high of the day, at the swing high we have right there. Just in case it's making sort of a double top and drops down, right? Another partial at the daily level. You see it didn't even reach the high of the day after the breakout. Started dropping down, and he just decided to bail on it. Everything was amazing there, but the last part, we both did it wrong. You and me. No need to exit. This is a huge move. We need to see pullback. A pullback is totally normal to happen. So guys, do we have any questions? Let's take a look at the market quickly. No, we don't want to close. PTON. Will this actually change my stocks here? Oh, it does. Perfect. SPY. Let's take a look quick. Move at these stocks. NIO. Do I like it to the long side? I don't like it to the long. I don't like it to the short. I see that it could be a long because of that bounce right there, but we're having a level so close, and I'm not willing to risk it. CGC, not looking good for me. AAL is decent, but the daily is weak, and the 60 is not clean. It could make a pullback and continuation, so not taking it. PTON is decent. Daily chart is good. 60-minute chart is good. We're breaking the range. Right there. Not bad long with a stop loss in the middle, and then just try to trade it. The problem is this move right here was so big, and this pullback right here was small. Right? So it's not making it perfect. Let's take a look at what Peter did on Apple. Peter shorted Apple, right? Apple for short, was it bad? It wasn't. Like, you see a double top right there, right? Fake breakout. After the break, we want to see a retest and a continuation. What happens? It gets into the middle of the range and it's dropping down. Peter on it on the downside. He's on the right position. From 117.10. You see, guys, where he shorted it? After the break, I bet he shorted it somewhere here. Did you do that, Peter? On this candle? Or maybe this. That's it, guys. You see? It's breaking. Getting back down. He's taking it to the short side. Amazing entry. Enough confirmation for him, right? We also have a cross of the 50 with the 9 and the 20. The daily chart on a downtrend, but intraday it's going up. This is a good extreme reversal. First target here is view up, and he could go even below view up. This is amazing, Peter. Let's take a look at what else we have. I know this is already a huge move. Look at the ATR today. I mean the ATR usually and how much it moved today. Like this is so much. I'm definitely not trading this thing anymore to the long side. CCL. To the downside, look at the move, guys. More than the average true range. We're bottoming. Will I take it to the long side? Not really. Because it's already a huge move. And not because it's already a huge move, because it's weak on the daily chart. I know it's bottoming, and I know it already dropped a lot. It's highly unlikely that it will drop more, but it could drop more. This is not a great place to take it to the short side. Not to the long side as well. SZN. This is good. This is really good. This actually, maybe I should try this one. Okay, let's see. Let's not make quick decisions. So the daily chart gapped up, 60-minute chart new high, 5-minute chart ABCD pattern. We're having sort of a range right here. We are breaking it. Pull back, continuation. This is actually decent. I'm definitely going to keep an eye on this one, and I think this could be a decent potential. Just need to wait to look at it more. Above this 5670 or 5673, I might try to the long side. Plug, not good. Beyond, choppy, tough. FSR, also choppy, like literally nothing. CGC, we said it was ugly, and Baba is also ugly. So they're done. Let's take a look at Apple and what we said right there. So to explain again why for Apple and why it was a good reversal. It was a good reversal for, first of all, at the daily chart it gapped down. Intraday it went up. Rule number one for me to take extreme reversals is to go on a reversal with the direction of the gap. The stock gap down, I want to take reversals to the short side. The stock gap up, I want to take a reversal to the long side. The stock uptrending, I want to take a reversal to the long side. The stock downtrending, I want to take a reversal to the short side. Next thing, fake breakout. I mentioned this on my webinar. Fake breakouts, right? After the break of range or after a break of the wave, you want to see stock either shooting up or pulling back retest and continuing. What happens after this breakout? It gets into the range. We don't like to see that. Combining it with a new 5-minute low, with the cross of the 50 moving average with the 9 and the 20, and I am sure we had a new 15-minute low. I bet we had a new 15-minute low. See guys, this is 30. Actually the 30 is also good, like look at those wicks above, but I'm sure we had 15-minute low. Yeah, combining it with the new 15-minute low, that's ideal. And I think we could drop even more. You are welcome. Now let's take a look at this one. BA. This is decent. One problem though. The daily chart, guys. The daily chart, we did a huge move, and the move is more than the average true range, and I'm not sure how far we can go, right? It could break out, but how much will it run? The breakouts, the pennants, the ascending triangles, the descending triangles, those are breakout patterns, and I want to go for the breakout on those, not for a small scalp on them. So yeah, it's not ideal. The triangle here is also not clear. We don't have a flat resistance. It's something like, let's see, something like this, and something like that, and something like this. And I think on the 15 it's more clean, but yeah, we are having sort of a triangle, which is not the best. But yeah, I'm not trading this thing. So yeah. Yeah, Peter, you're right. I actually have it here, but I have no idea why I don't do that. Alright guys, if you don't have any questions, have a great day. Trade safe. I will move right now to the chat room, and I'll talk to you there. Thank you for sharing your trades. If you have any more questions, feel free to email me, Ayman@beerbletraders.com, and I will talk to you soon.